Let's start, man. Let's start. Let's drop these dimes. Let's drop this dime. You there, my brother? Are you hearing me? Andre, are you there?
Right here, loud and clear, man. What's up, JoJo, the fisherman that trades fishing pips till I die? You know what I mean? What's going on?
Everything blessed, man. Everything blessed, my brother from another mother. Blessed
Yeah.
night to the public. Blessed night to the wider viewers. Welcome to, this wonderful, wonderful preview of what's to come, guys, right? From fishing for pips and our community. Guys, it's been a journey and we are just putting some good stuff together to help people to become successful traders.
Sure.
Right? What we're going to share with you guys today is a preview. Just a preview. Just a little taste. Just a little, just a little of what is to come. All right. And definitely this will put you guys ahead. Anybody who come in contact with this information, I guarantee can change your life in this business of trading the financial markets. All right. My boy Andre, introduce yourself a little bit. Let the people know who you are and what we're about to drop here tonight, brother. Let's go.
I swear they know already, but if you don't know, you know. My name is Andre Seeley. I'm a trader just as well as Jojo. Jojo is the guy who really opened up my eyes to what I've been missing my entire trading career. I've been trading for about going on 3 years now, and was finding a lot of difficulties. Even though all the information I read, I just still felt like I was missing something. And I have a very academic background, college, scholarship, masters, all of that. And and it's so unique, Jojo, that you and I coming together, we connected in the spirit, but our lives are so far apart. But it really is something actually biblical, how God uses the foolish things to confound the wise. And I'm not calling you foolish, but there's a thing that someone like you, given your history, given your background, are teaching the wisest people on, who are deemed to be intelligent and wise, and you are actually educating them instead of they educating you. I think that's a true testament to the power of God and what He's doing in our lives, and even how you and I connected to put out this material is pretty amazing.
Yeah, bro, coming up in this business of trading, going through all the same thing that most people go through, losing trades, not understanding what they're doing. A lot of struggles coming up in trading, losses, blowing accounts, etc. When I really understand how the market really works, right, I could not have just stand idly by and watch so much people fail and never share what I knew with them. Right? If I was to do that, I would have just, I would not have been fulfilling my purpose in this business. Right? I would have feel like I'm not fulfilling my purpose in this business if I just sit idly by, watch people fail, knowing that I have very powerful information, education, knowledge about the market and how a trader could really become consistently profitable and grow a massive trading account and really experience financial stability, financial freedom, financial independence, because a lot of people fail in forex. A lot of people, we don't hide that. We're not ashamed to say that. We are in a business where a lot of people failing. People have a lot of bad things to say about trading, right? A lot of bad things to say about trading, all right? People think it's a gambling. They think it's risky and they're afraid it and all different. It's a scam, it's a scheme, all different type of stuff. But we are here to show you guys how, if you educate yourself and you be disciplined and you be patient and you be humble and you apply yourself consistently and you absorb the right information, the right education, the right knowledge, and you approach the market from a professional standing point, you will be able to see the results, right? It doesn't mean that it's guaranteed, because The only thing guarantees if you put in the work, you may see the result. But you could guarantee failure if you do nothing at all. But if you put in the work and apply yourself, you may be able to see, right? You may be able to see the results. But if you do come into this business and you do nothing at all, definitely you will get some spin kick. All right. So me and my boy Andre, we really come together to share some stuff with you guys. So Andre, before we move on and dive into the information, have anything else you want to share?
Yeah, well, first of all, when on the presentation, show the slideshow so the entire presentation could come up. Click slideshow at the top there. Okay. Slideshow at the top, the ribbon at the top, you see slideshow. After you see home, insert from left to right, design. Right. Click on slideshow.
All right.
And then you click from beginning. Okay, so while he's doing that, as you said, when people have this information, they usually keep it to themselves. I know a lot of people who we show this information to is two categories of people, right, Joe? There are people that once they get it, they said, I am not going to tell anybody about this. Why? Because they're selfish and they feel like the losses that they had, that somebody else got to go through that too, and they're not going to make it easier for the next person. That there were those category of people. And then there was another category of people that said they literally reject the information. And that's why when you go on to the YouTube University, when you see the information that comes up with trading, most of the information is the wrong information. Okay, but people are so, this is brainwashing, okay? People are brainwashed and they literally, a lot of people would say, well, why are you guys putting all this information out there for free and this, that, and the other? But this is for free, but the book has a cost to it. Is because we genuinely do not want people to fail, because it's not a zero-sum game. Jojo doesn't have to lose for Andre to win. I mean, the market is trillions of dollars, billions of dollars, depending on the particular asset class. And the idea is that the more people win, the better for them, because people are, the reason why they even got into trading or investing is to take care of their families. People lose their life off of trading. The guy with Robinhood, who took his life when he thought he had Blue's account. People just trying to provide for their families. So why not, want to assist in that process? So that is why I believe we've been empowered with the information and want to put together some material out there. And that's why we call it the only edition. Even though you see first edition there, we're going to edit that and call it the only edition. And we're doing that with confidence, knowing that this is only, you just need to know this, and you'll be on your way. And that's why I want to present that today. That's why for all the 50 people that are on the call right now, really going to give you guys the idea behind this preview is just to get you to think, to intrigue you, to reassess what you've been doing for your entire journey so far. And if maybe some of you are new to the journey, but this information should definitely get your attention. So Joe, click from beginning there so we can the whole screen, the presentation.
Beginning. Where beginning is,
Right, to the left of the screen. You click from beginning. Yeah, click that. Yeah, click that. Okay, good. Nice.
Right. Good. So to change it, just click the screen. Don't know how to use
this. Click the screen or click the cursor left, right, or
Okay, wonderful. So blessed night again, guys. It's the CEO of Fishing for Pips, your boy Jojo Charles, the trading fisherman, the fisherman that trades. You all know how we do it, right? We are the market maker masters, right? Professional, successful traders, and we are here to share with you how you can become a successful trader too. Losses is part of the business. We all have losses, but we make thousands of dollars on top of our losses. It doesn't hamper us. We don't care. Right? It's part of the business. You got to respect the process. Great. We use calculated risks. Calculated risks we use, and we do very fine in this business. Great. So nice. Let's dive into it. So the business model of the market makers, guys. This will be the book itself, but right now what we're giving you guys is the preview of what's coming. Very, very powerful information, education, and knowledge. I'm telling you guys, you put your hands on this. You absorb this information like a sponge, and you go and put this information to work, I guarantee there's not much for you to learn in trading again. Once you're exposed to this information and you understand it, is not, you don't have to know everything. You don't have to know everything. You just need to know what's right and what actually works. Great. And then you follow that, right? You follow that, you focus, you follow one course until success. You don't try to trade 10 different strategies and mix it up like a callaloo and all this crazy stuff, right? You focus, you follow one course until success. You don't look at 10 people trading 10 different styles and try to trade the 10 different and mix it together and stuff. That's gonna only make you fail. All right. Yeah. So we want to show you something that's very sustainable, something that's tested and proven. Huh?
Hey Joe, so you see on the screen, on the bottom of the screen here, you might have your controls. Could you hide that? Like hide floats and controls, there's something, because when you look on the screen there's this kind of block thing. I think that you need to hide that because it's
nice. Yeah, no, hide it there.
It's singing part of the screen.
Great. Seeing it better now?
Yeah, and well, there's also this little block to the right-hand side there. I don't know what that is, but
all right. You seeing that? You seeing it, sir?
Take off that block. It's still there, but it's at the top now. But maybe I don't know if that's my. Maybe somebody could comment whether or not. Oh, I think it's good there. I think we're good there.
Yeah. All right, wonderful. Guys, so the business model of the market makers. We need you guys to understand this. Strategies change, but systems and methods only require improvement. Why do we say that? How many strategies that you guys have seen out there? Strategies after strategies after strategies after strategies. How many people are still trading the strategies that they were trading with from 19 how long? Strategies always change.
Yep.
Strategies are not sustainable, right? Strategies, they don't work on every pay. They don't work on every time frame. They don't work in every market condition. They don't work in every asset class. So we understand that strategies was something to really make you have a difficult time, right, in the Forex market.
And so I think what is also meant to do, Joe, is to have the people coming back for more, because there's always some new strategy. Oh, you got to try this triple fire. You got to try this BRS strategy. Oh, we got a new thing. Because so it's really it's an advantageous. You're taking advantage of you to come back for more, thinking that what you need is more. But the idea, what we are trying to say, is less is more. Correct?
Yeah, less is more. Definitely less is more. Because I've passed through educational platforms and stuff, and I've seen people create different strategies and stuff, and then they start making a little money with it, and then people start hyping it up. Oh my God! And all of a sudden, you're not hearing about it again. You know what I mean? All of a sudden, you're hearing about it again. It disappears. Another one comes up. People start seeing other results with it. Boom! All of a sudden, you're not hearing about it again. Right, so we understand that was a kind of cycle within how strategies actually come, but it's not sustainable. And what we're looking for is something sustainable, something that is tested and proven to work on a repeat load. Because you cannot be consistently profitable with trading something that changes all the time.
Correct.
All right, you got to find something really, really solid that you could literally see a repeated behavior, and you will set up and wait for that and take those setups, right? So we understand that strategies change, but methods and systems and methods only require improvement. That's where the business model of the market comes in. Because once you understand the business model of the market makers, it doesn't change. Right? It doesn't change. All you got to work on is sharpening your skills and improving your skills on this, and you will start progressing, becoming consistently profitable. And that is what you need to become, to grow a massive trading account. You cannot grow a trading account without consistency. You need to be consistently profitable to grow a massive trading account. And your goal is to live off of your trading account. That's what all traders' goal should be, to reach a level of you can grow that account, make withdrawals, and create a better financial future for you and your family. Right? Actually, you want to put anything in that?
Right. So, so as we walk them through the material, the idea is that we're going to walk you through as if, step by step for you to be able to see it for yourself. Don't take it what we are saying. And that's why I really wanted to go through this to explain to you how this thing works. Okay, so let me start it off with the first slide. Go to the first slide there. Okay, let's click next. So, all right, okay, great. That's a beautiful picture of Jojo there, man. You look so handsome.
That embarrass your boy in the dance.
No. Okay, the secrets behind the manipulation in the financial markets. Okay, next slide. So the question you have to ask yourself, is the financial markets actually manipulated? Okay, and the reason why a lot of people reject the information is based on what they've been taught over the last couple of years. Because what we're doing is presenting information that is actually challenging people's belief systems. Okay, it's challenging the things that you have believed to be true your entire life. And what Jojo said earlier in the fact that most traders and investors, 90 to 95% of them are unsuccessful. Okay, the entire currency market itself is dominated by large banks and institutions, about 80% of them. When we look at the market, right, look what happened with GameStop. And a lot of these companies, where you see the stock prices of companies that never had a profit before. Up to now, Twitter never had a profit, I believe. Somebody fact check me on that. Okay, but yet the stock prices going up. And stock prices of companies that went bankrupt. And we're going to give some examples of those. Some of those examples throughout the presentation here, stock price going up. So you want to know what's really going on. Even though the information is staring you right in the face, a lot of people tend to put the blame, Jojo, and they say, well, that's Wall Street, as institutions and banks, but there's this very distinct group that a lot of people don't necessarily have the knowledge or awareness of who they are and how they actually do their business and what their role is within the financial market. And this is the market makers. And that's what we're going to firstly introduce you to. So the series of this is going to be 3 parts. You're going to introduce you to who the market makers is. You're going to describe to you how to detect market manipulation. And lastly, we are going to show you the business model. Okay?
Good stuff, guys. So put on your rocking chair and let's roll, man. Enjoy the ride. Because listen, this information that we have here, I'm telling you, is going to impact people all over the world when coming to trading and getting the right information, the right education, and the right knowledge. Definitely is going to help a lot of people to become successful. All right, and that's my goal. I love to see people win. I don't know you, but I have your best interest at heart because what I want for myself is what I want for you. All right, so let's go.
Keeper. Yeah. I am my brother's keeper. Treat others like how you want to be treated as a principal, right? So
correct. All right, so let's go. Let's dive into it. Guys, so 95% of traders and investors are unsuccessful. Why? We know why. Good. The information out there is designed for you to provide liquidity for the bigger boys. They're not teaching you how to really approach the charts. There are educational platforms out there. There are books, there are videos, and YouTube University. Too much information out there in the public domain for so much people to be feeling. Think about it. There's way too much information out there in the public domain for so many people to be unsuccessful in the largest financial market in the world. Something have to be wrong with the information that is out there. You could tell me that all this information, no one is finding anything inside there to really become a successful trader. That alone should have you thinking.
Yeah.
What is out there? Is it correct? Is it the right thing? Right? That should have you thinking. Approximately 80% of the currency market is dominated by large banks. So, in my words, the Forex market is rigged. It is rigged by a small elite group of persons. And this is why I say persons, because there are people just like me and you, human beings just like me and you, not algorithms and AIs and EAs systems and stuff. They are persons like me and you, professional traders. They work for the big banks. They work for the financial institutions, the government, the hedge funds, right? The market is rigged by these guys. Now, most people might hear that and think that's a bad thing. That's not a bad thing, and that's not our concern. Our concern is to find out how they conduct their business so we can trade in line with them. This is how you become a successful trader. Anytime you're trading against them, couple smoke your pipe, you're gonna blow accounts after accounts after accounts after accounts. You will win today, lost tomorrow, win today, lost tomorrow, win this week, lost next week, lost, and still blow your account anyhow. But that's how it's designed. They're designed to show you some money. You will have a successful day. You might have a successful week. But when you check it, down the road, 6 account gone. You blow about $5,000 and you're still going and fund your account with the next 1,000 to go back and trade the same way that make you blow 5 accounts. All right? But this is what I need to tell you. No amount of applying the wrong thing will give you a level of success in this business. I don't care how much you go and apply the wrong thing. You can apply it from now until thy kingdom come. You're still not going to become a successful trader because you're applying the wrong thing. And you know, one of these days, I will get you. I will get you. One of these days, I will get you. One of these days, I just wouldn't blow my account. But you're trading the same way. They say the definition of insanity is doing the same thing over and over, expecting what? A different result. Right? You cannot blow your account trading a particular way 5 times you blow your account and think that one day it will just change. It will never change. You got to reset and you got to relearn for you to really, look, seek out information around here. Find the people who are successful. Let them teach you how to do it. Copy them, emulate them, do exactly as they do. That's what we're doing. We're doing what the dealers are doing. The people who rig the markets, that is what we are doing.
And that's what we want to explain to them, but we want to do it in a real systematic way. So go to the next slide, Joe. Who's these market makers? So we're going to give you a formal definition of who these people are. I want you guys to put on your thinking caps, okay? Go to the next slide. Who are the market makers? Okay. A market maker is a firm that stands ready to buy or sell a stock at a particular price. You heard Joe mention liquidity providers earlier. They're also referred to as a liquidity provider. So essentially how it works is that they act as middlemen in the markets. Okay, so they're buying shares of companies, they're buying currencies, and they operate across all different asset classes. And then they distribute them to the retail traders. So it's market makers or brokers, smart money, they're all referred to in the same context. But at the end of the day, what they do is that they make a market to assist in the trading of securities, to assist in trading. When they say securities, as you mentioned, he trades primarily in the currency market. There's also cryptocurrency. Okay, there's the stock market, there's commodities, there's precious metals, all of that. Across the board. And the whole idea of these people is that they are intentionally, and that's why we have this diagram here with this man that is putting 2 people together. That is the transaction, the buyers and sellers. And there's someone who's facilitating that in the background. And the purpose of highlighting that image is to demonstrate that the person who's actually facilitating the transaction, they can't be seen, they're hidden. Or even worse, they are intentionally trying to disguise who they are and what their real intentions are. So that's essentially who the market makers are. So the next question you think they will have, Joe, is that when you see, saying, okay, there's this group doing this, and you say about making a market. Well, let's try to explain to them what making a market is. So if you go to the next slide. I don't know if you want to jump in here and talk about how, I could set the tone, how they actually make a market. But essentially, what you have is that you have this entity, this person, this institution. And when there isn't someone on the buy side or the sell side. Somebody isn't there to always buy a transaction. You know, for example, like the local stock market here, they say is very illiquid because there's not some readily available person to purchase or sell a stock at that time. But in the global financial markets, they need the liquidity because the show must go on, right, Joe? It's a fish market. Right. The show must go on. So that's why, so you have this entity who steps in to provide or facilitate those transactions. So they function as both the buyer and the seller for any one transaction. So the reason why that should pique your interest, because now if you have one person who's essentially playing both sides of the same transaction, you should be scratching your head and being like, okay, well, how are they benefiting from this? How do they make money? Right, Joe?
Correct.
You want to touch a little bit on that?
Yeah, because you need to understand that the market makers, right? They have a specific job, right? They got a certain job. Now, I just want to read all this before I get more deep into it. What does it really mean to make a market? Because that's what they're doing. That's why they are called market makers. Why? Because they are making the markets. The markets are manufactured. They are making the markets. They create trading environments for traders to buy and sell a particular currency pair or asset, right? The two market makers describe the function of these firms. They simultaneously buy and sell shares of a security with a goal of ensuring that it's always available on demand. They will facilitate certain things. There isn't somebody here, they will drive the price up just for you to come and start buying. There isn't no sellers here, they will drive the price down just for you to jump on and start selling. But what do you think they're doing that for? They want you to trade against them. You have no value to the dealer if he cannot get you in a trade. Your money sitting in your trading account is of no value to them. They cannot make money unless they get you to take a position.
Yeah, for sure.
They want to create a trading environment and you're going to take a trading.
You jump in the gun with them, but we had to walk them through that whole thing. Hold on. Yeah. Right, just hold on there, brother.
Yeah.
Because remember, think about it like it's a baby, right? They have babies, right? They say, well, I was taught X, and now we're trying to say Y. Like, you can't jump to the trading environment and all that. Yeah, you say, okay.
Yeah. I can't hit them with it, but remember that it done in my head. So.
I know. Right? So you explain to them that's what it means to make a market, meaning that there's an entity playing both sides of the same transaction and facilitating those orders. So, but they have to find a way to get compensated. And we're going to describe that to you. That's what it means to make a market. And when you use the word liquidity, speaks to somebody's ability to get in and out of a transaction always immediately. That's why when you press buy or sell, it happens instantaneously because the currency market is very liquid. Okay?
Correct. It's very liquid.
And then you say liquid, that is what we refer to your ability to purchase or sell a security, a currency, a stock, cryptocurrency instantaneously. Okay, let's move on to that's what it means to make a market. If you guys clear about that in the live, just say, yeah, I understand what it means to make a market. And let's move on.
Oh, this is big. This is large, right? This is very large shit. See this quotation from the leading global market? This is very, very, very large. If you guys understand this concept right here, this could change your whole life. Right?
Read it out for them.
This could change your whole life. Or to help you better understand this concept, read the quotation cited below. It is a quote from one of the leading market maker companies in the world. Now, here where it's coming from, right? Here where it's coming from and hear what it's saying. Our mission is to create the fairest, most transparent and open markets in the world. We carry this out every day by providing clients a seamless trading experience to meet their liquidity needs. Our team approaches the market making as a place of perpetual reinvention and a fundamental bridge between the financial markets and the real economy. You see that bridge you're talking about there? That's why Andre made a statement. You know, Andre created the forex market is not a reflection of the real economy.
Hey man, Jamaican again.
No. I just say when you get down there, you get down there. But I just need them to make them understand. You see where the bridge between the financial markets and the real economy. You all need to understand something. This right here could change you guys' life and make you become a real successful trader.
Because look at this. This people, I want you guys pay attention to the words. So what we're gonna do, we're gonna analyze this statement, right? Because this is from, again, a leading market maker, and this is actually what they said. Now let's decode what they said. Go to the next slide. I'm gonna decode it for you guys. Okay. So as we decode it, market making is a place of perpetual reinvention. So there are a number of keywords and phrases that if you listen to that, if you take a screenshot and go back to it and go back to it on your own, it should jump out to you from the quotation, right? The first thing the company says is that their mission is to create a market. They said it out the jump. They left the gates out the door, and they tell you, yes, our mission is to create a market. Okay, okay. Second, they go on to say that the market they create is actually fair and transparent. But the question you have to ask yourself, the question I asked myself when I first read it, I was just like, wait now, but who is fair and transparent for? Not for me, and unfortunately not for the traders and the unsophisticated investors that are out there. And the answer to that question, ladies and gentlemen, is this. That is only fair and transparent for their clients.
Their clients.
Their clients are paying them, and that is how they make money. Okay? And who are their clients? The banks, the institutions, central banks, government, multinationals, hedge funds. The same Citadel, who's a market maker, they have the same company owns a hedge fund. So now you are the market maker and you are the client. Come on.
Now, Jay, remember that we need you guys to catch this, right? If the market makers working for these big boys in the market, these big boys are their clients. This is who it's free and transparent for, not for us, right? Go ahead.
Correct, right. So in addition to that, so they tell you they create a market. They tell you that is fair and transparent. They told you who is they told you who is for fair and transparent for. Okay, and they went further along. They say market making is a place of perpetual reinvention. So when I looked at that word, I was just like, perpetual reinvention. And Joe, then it clicked. I was like, oh, that's the reasons why these chart patterns always occur over and over again, repeating themselves because of what they said, perpetual reinvention. So that's why those chart patterns now is almost like a symptom of this root cause of creating this market, and it's happening over and over again. So essentially it's a perpetual cycle of the same thing repackaged in different ways, i.e. reinvention. So you can't have I never heard anything about reinvention. You have an invention and then that's it. But a reinvention is when you do that, okay, now I have a new invention, now I have a new invention, and that's just a cycle. And that is why you see the same patterns happening on a daily basis. But then this is the kicker. This is the kicker right here. The company says, Citadel goes on to say that it describes itself, and Joe highlighted that earlier, as a bridge between the financial markets and the real economy. Therefore, ladies and gentlemen, there's only one thing that we can deduce from this. And go to the next slide there. There's only one thing that we could deduce from this, which is what Joe said. The financial market is not a reflection of
Real.
the economy.
Yeah, it's not a reflection, right?
It is not real.
It is created.
It is created. Because they said so in the first paragraph, Joe. They said the mission is to create a market.
It makes so much sense. It makes so much sense when it comes down to the charts. When you go to the charts and you see something, you hear something, or you see something. This is where buy the news, sell the rumors come from, or sell the news, buy the rumors, right? Buy the rumors, sell the news, buy the rumors, right? Because persons hear things, see things, and then they might believe certain things. That's why they also say that the market is belief driven. All who believe it will go up, all who believe it will go down. But it didn't really have nothing to do with what you believe in. What you believe, that you believe, and you maybe need some Panadol for that, right? They are going to conduct their business how they see it fit, no matter what you believe. Great. It's not the real economy. People go and look at fundamental analysis to try and buy or sell a particular currency pair, right? They look at fundamental, which is news. You ever realize why Forex Factory you can see next week news and next month news? The numbers are already factored in. They already know what's going to happen, right? They already know what they're going to do. It's all about the money in this business. It's all about the money. And wherever the money is,
okay. That is where, right, and we're gonna explain that to them too. But
right?
at this juncture here, what we have done, right, is that we have showed you guys, and if you agree that the thing is created because they said so, they said the mission is to create it. Just describe who these market makers are. You just describe what their role and function is and how, you know, how they actually make money. It's from, I mean, we'll get into that, but essentially it's from spreads, commissions, and as we dive down into material, we're gonna show you how they actually make the money.
I'm gonna show you how they actually do it, right? So stay tuned, get your popcorn, get yourself drink, enjoy it, because I'm telling you, if you understand what we are showing here, success is gonna be on your part. Success is gonna be on your part as a trader, as you have the right information, the right education, the right knowledge. All right. If they say the economy is created, guys, right? It's not a reflection of the real economy. This whole thing is created. You know that these guys are literally painting something on the screen for the retail herd out there to see.
Yep.
They are creating a trading environment because they know what you were taught. They know the education that you have. They know you went to YouTube. They know you went to some educational platform, and they teach you to trade a particular way, right? And what you do is you learn that and you go and apply that. You go and approach the market and try to trade like that. And a lot of you who are watching right now, you all know the results. You're trading a Congo lie. You all know the results of all that good stuff that you learn. What happened? You barely make a withdrawal. You blow your account over and over. You're not getting any consistency, right? You're not being consistently profitable. You're losing all your money. And then you're blaming and say, oh, the business, you're wrong. Oh, the business don't work. Trading, not take risk. Because you never take the time to really seek proper information of how the financial market really works. Who is the big players in the game? What really takes place on a daily basis in the financial markets? How the industry is designed. If you never take the time to learn these stuff, I say to you tonight, from my heart, stop trading, reset, relearn, seek the right information, and come again. All right, let's go, Andre.
All right, so let's go on to how to, you want to open up your eyes, right? So you want to see how do you detect market manipulation? That's the next segment. What can we show them on the screen what it is we've been talking about? So let's go to the next slide. Okay, the idea about chart patterns. Now, this is not to be mistaken for technical analysis, because essentially technical analysis is just a way of trying to find order in a market that's full of chaos. So they came up with these things like support, resistance, trend lines, indicators, all of that. But what you have to understand is that you're not trading against lines, you're trading against people. And what that means is that to contextualize what a chart pattern is, it's simply a root cause of underlying price behavior that reveal the hidden intentions of the market makers, right? So just to open up your mind some more, think about it in terms of financial statements, because I know there's some people who are, what Joe mentioned earlier, that they're fundamentalists, they're technical analysis, they're sentimental analysis, all these different things that help people to form a belief. But the charts, think about it in terms of financial statements. So a financial statement would represent the historical performance of a company. But if you can't read the statement, then you can't comprehend or interpret the position of the company, because you don't know how to read a financial statement. For any company, Apple, Facebook, Nike. So that is why a chart now not only represents the historical performance, but it also represents the present price and the potential future direction of the currency or the stock or the cryptocurrency. So therefore, that's why it's very important, and this is an actual skill, to be able to read and interpret the charts, because if you can understand what's happening or what's going to happen in relation to the direction of a currency, asset, gold, silver, whatever it is, then you'll be at a loss. And that's the whole notion behind a chart. It's not about the pattern, it's about what's happening behind the pattern. Can I add to that, Joe?
Yeah, definitely. You need to understand the bigger picture. It's not just the pattern. You need to understand the science behind what's happening. You need to understand the objectives. You need to understand their goals, their role, their function, what they're doing. That's why I tell people all the time, I don't teach M&W formations. Otherwise, you will go on the charts and you will find that in every crease and crevice of the charts.
Correct.
What I teach is to understand how the dealers conduct their business.
Yeah.
If you know this, this is where your success will start coming in. All right. You must understand the dealers and how they conduct their business, what they do and how they do it. All right. Let's move on.
Let's move on. Next step. So let's see. So the key concept, before that, go back. The key concept, and don't listen to that. There are some people, you gotta go back. There's some people now who say, oh, who's Jojo? Who's you, Andre? But don't listen. Don't go back. You gotta go back. But don't listen to
back.
You're going forward right now. I don't know. Let's click use the cursor and click. Maybe click back on the actual computer.
Awesome.
Joe is moving 10 steps. I had a pull him back. I want to give out everything. Okay.
I have to move back.
The idea is not to don't listen to us. Listen to some of the people, who may have. So if you go to the bottom of the screen there somewhere, no, you gotta try to go back. Okay.
Yeah, I think I get it.
Good. Right. So if you don't want to listen to us, listen to this guy. This guy was the renowned investor, an American financier named Bernard Baruch. And he said it best. He said, show me the charts and I'll tell you the news. So now you're hearing it for somebody who was a American financier and amassed a fortune on the stock exchange. He did so well in life that he actually impressed the president of America at that time, Woodrow Wilson, and he managed the entire U.S. economic mobilization in World War I as chairman of the War Industries Board. And this guy who managed the U.S. economic mobilization for World War I, telling us that show me the charts, and he'll tell you the news. So clearly there's something that he knows and you don't.
What most people will do, Andre, is look at the news and then head to the charts. He will say, show me the charts, and then I'll tell you the news. Yeah, you know what I mean? It's crazy. But this is really powerful. This is really, really powerful what he shared here. Because what he's saying is the news is part of the manipulation in the financial markets. So if I could see the charts, I could tell you what NFP is going to do, because they will be doing something. They will be making a particular move just before NFP comes up, just before NFP comes into play, or any one of those high impact red folder news. They're going to be making particular moves. So from a time like me, I'm in that position. There are many times I look at the charts and I can tell exactly which direction the market was going to go. And I know that I was going to use the news to actually make that move.
Correct.
Right? So I could have looked at the charts and I could have tell you the news. Right? I didn't have to look at the news. I read folder and okay, I see there are a lot of job cuts. People lost their jobs. The economy not doing well. I think price is going to drop. I think it's going to come out negative. Price is going to rise. I think it's going to come out positive. Price is going to drop. Whatever. Right? And this is what persons are using and trying to trade. It's crazy.
Crazy, man.
It's crazy, man.
So that's the key concept you want to understand. Now we want to show you some examples of that, how news is used as an excuse to push price in a particular direction. Go on to the next slide. So this is an example of Hertz, okay? So you see the little to no price action there. Accumulation, we'll describe what that is. And right before the Hertz release, which was on February 24th at that time, we saw price just going up. Weeks leading up to the earnings release, price just going up. And then just as the earnings came out, price plummeted and dropped over 70%. So the question you have to ask yourself right now is why was Hertz price going up right before the earnings release? And think about it in the sense of, that's why we're approaching this market. I know Richard Wyckoff said it best. He said that you have to approach your markets as if there is just one person, that market maker represents one person, or he described it as the composite man, and you're trading with this person. This person is on the other side. And if you were in a position, a financial position where you could move price in either direction, wouldn't you want, if you knew price was going to drop, wouldn't you want to sell it at the highest price? Somebody answer that for me in the chat. Would you want to sell it to get the highest price possible if you knew this news was coming up? Bad news report, and price was going to drop. Okay? That's case number one. Now case number two. Now case number two, let's go, because that's good. Somebody might be saying, but that's it, that's only happening in the stock market. Let's click the next slide. Okay. That's the one. Oh, you have the old one. Shoot. The other one had some other examples. Okay, well, that's fine. So that's key concept number one. We had some other examples there showing you it in other.
I think it's here too.
Nah, this one is the heavy movement. Maybe I could show my screen.
Yeah, that's yeah. Let me think so you could share the good version. That's all. I'm gonna skip. Yeah, share it.
You see that?
That's how now streaming. Now sharing stuff. Yeah, seeing it there.
So the reason why I said that, because somebody was saying, well, is this only applies in the stock market? I trade currencies, I trade crypto. No, it applies across the board. If this
goes across the board, brother. Multiple asset class. This is the business. Remember, guys, this is the business of the market. This is not a strategy somebody came and create and people see other results with it. And then this is the business of the market, right? This happens every day. It happens on every pay. It happens in every time frame. It happens in every asset class. It happens in every market condition. There is no strategy out there that works every day on every pair, in every asset class, in every market condition, on every time frame. There is no strategy out there that works across the board like how the business of the market works.
Right. So this is this part here. This is another example. Some people might be trading oil. So oil inventories usually come out weekly. Okay, around 7:30, usually on a Wednesday and sometimes on a Thursday. So what happens is that if there's a change in the number of barrels of the oil, that's what it depicts, the change in the number of barrels in the oil in inventory held by certain firms. So if it's the actual is less than the forecast, it's good for the currency because it's like economics, demand and supply. Okay, you want to have less in the barrel, less in the kitty. Therefore, you know that you're selling oil. So on March 10th, the actual inventories was, they said, was 13.8 million, while the forecast was 3 million. So given the laws of supply and demand, the expectation that oil should fall because you have more inventory than what is forecasted. But even apart from that, even if you don't understand all that, the idea is that leading up to the release of the oil prices, indeed, price was falling just before and then soared right after. So again, the question is, if you knew that the price of oil, okay, was going to rise, wouldn't you want to buy at the lowest price possible? So in this case, the price was falling right before the release, which was consistent with what the release said because of the forecasted amount. And the inventories was more than the forecast.
Correct.
Why did that happen right before the release? And then boom, the price shifted in market direction. Price soared after the negative inventory release.
Started to go up.
Yes, sir, went up. So these are the things. That's why the point of this is to make you guys think about what's happening there. So the idea is news, and that's a key concept you want to recognize. One of the two key concepts. News is used as an excuse to push price in a particular direction.
Correct.
You want to touch on the second concept, Joe?
Be fearful when others are greedy. And be greedy when others are fearful. Right? This is a big investor, one of the biggest investors who've done really well, Warren Buffett. Right? You need to understand this man. When he shared this about being fearful, when people be fearful in the market, what do they do? Be fearful when others are greedy, and greedy when others are fearful. You free to do something? You free to take a trade? You don't know what's going on. You don't know who you're up against. That's the time. That's the time. Be fearful when others are greedy. I need you guys to sing this to sink in your head, right? Be fearful when others are greedy. When you see a lot of retail hers is rushing on one side, I need you to be fearful of that trade. If the market makers push price up in the air aggressively, right, and people are just rushing and taking that move because FOMO started setting, FOMO, fear of missing out. They think price is going to the moon. They start jumping on that trade. I need you to be fearful of going in that direction.
You're right. And the reason for that is to give that, contextualize that statement, because Key concept number two, an aggressive price movement is usually a false or manipulated move. So a lot of the times when you see these aggressive moves in the market, is that it dictates two types of emotion, fear and greed, if depending on what side you're on. Okay? If you're on the wrong side, it'll be fearful. If you're on the right side, you might be greedy. Okay? So let's show them some examples of a fast and aggressive move. Okay? So here's the price of gold. Okay, here's the price of gold, right? You see this consolidation, price going sideways, and then a fast move. This is where people get fearful. Because they end the trade, they say, boy, market selling off a large aggressive price movement. And then shortly thereafter, the market shifts.
My beautiful move. My beautiful, beautiful moves.
I know goal is your bitch.
Right, guys? If you look at this here, what you're seeing after a contraction phase, that's a trading environment that the dealers are creating. After a contraction phase comes an expansion phase. After the expansion phase comes the trend phase. All right? When you see price comes out of a contraction, what persons were taught to do when price comes out of accumulation phase, contraction phase, or consolidation phase? They were taught that once price breaks out in that direction, price continues going in that direction. So what do you think that big candle that spiked down there outside of that contraction phase, what do you think that made a lot of traders do? It made a lot of traders take short positions. It's aggressive, it's big, it's fast, it's a long candle, impulsive, right? They can spike it very quick. And what that does is have persons literally FOMO sets in, and they will take trades in that particular direction to sell. Now that's what they want you to do. They want you to fall for that, right? Because they know that's what you were taught. Some educator out there show you that, somewhere you learn that, and when you see that happen, it brings a certain belief in you. And what you're going to do, you're going to get greedy, raise your lot size, take multiple positions, tell yourself that this is the perfect trade, and you sell because you expect this to keep on dropping and making lower lows, and start trending down. You got something else coming against you, man.
Correct. And then when we show you guys the business models, when we're actually going to dissect every different play. The point of right here is just to show you that at this point, according to Warren Buffett, is where people get fearful. But with us having the correct information, this is where we get quote unquote greedy, because we know that people, this is the time to buy when there's blood on the street. Okay? So it just shows one mentality with the same information that's being presented on the chart. And again, if you knew that prices want to go down, you'd want to get it at discounted prices. So this is just one example. But a most recent example, would be what happened with GameStop. You guys remember GameStop? If you remember GameStop, was this stock and retail traders, everybody from Robinhood, they said, well, the retail traders pump up the stock and they all came together. And you guys remember that story with GameStop recently? Okay. In February 2021, there's a lot of hype surrounding GameStop, and the traders thought that they could have come together and push the price up, and they thought they won. So the price did go up significantly, hundreds of percent increases. But then right before, and you see this right here, this large and aggressive move. Right after that, they saw GameStop, this
crash.
Crash. Over 300% just in what? A matter of days. So with that large price movement, people get what? People get greedy. People get greedy now, they put, right? But we understand how to play this, and this would have been an excellent opportunity to short GameStop based on how we know the market works. Key concept number 2, large and aggressive moves are usually false and manipulated moves.
Correct, correct. All right, guys. So you guys are getting some information here that will definitely open your eyes, open your mind, and make you reset and relearn how you approach the charts and what you're applying. Because as I say, no amount of applying the wrong thing will give you a level of success in this business, right? If you take away anything tonight, let that go with you, right? Because I'm telling you, if you want to become a successful trader, there are things you must understand and there are things you have to do. All right.
So this is the thing, Joe. Now they're sitting back there, they're saying, "Oh my God, what have I been doing? Is there any way? How could we win? How could we beat them?" Well, this is the thing. The idea is not to beat them. The idea, Joe, is to join them. Correct?
Correct. Join them.
We want to join them because at this point, he established the fact that the financial market is manipulated. It is a manufactured market. Hashtag made in China. Okay? Now, what they need to also understand is that these people don't control the market. They just take advantage of the different market conditions, news, human psychology, etc. So it might be, looking at it, it might be difficult to be able to, how could I win given the sheer size of this market? How could I be able to identify trading opportunities when you have all this manipulation happening, okay, with the market makers? Now, this is the thing. There's hope. Because as we describe this business model to you, what you have to understand is that their playbook is so limited, okay? And we're going to show you, at least in this preview, one way of being able to detect what they do, because they can't do what they do without leaving clues. They need to leave clues, and if you are able to identify those clues, then you could learn when the market is about to make a major move, and instead of trading against them, you trade with them. What do you say, Joe?
Correct. Hitch a ride to success. That's what we call it. Hitch a ride to success. Catch the market swings. Learn how to read the moves properly and then catch the swings. Trade in line with them because they're going to be conducting their transaction whether you place a trade or not. Right? There are bigger entities in the market making their moves. So your job, our little money sitting in our trading account can't do anything. Right? That's not saying anything in the market. When they are making their moves, all you need to do is learn how to read the plays and hitch a ride to success. That's all. All right. Let's on to some other information now.
Okay, so at this point, now we describe to you who the market makers are. We describe to you now how to identify market manipulation. If you remember, what are the two concepts? Somebody type in the chat. What are the two concepts to identify market manipulation? So the next part you need to understand is that you do not need to be intelligent to be successful in trading. You just need to be informed. So we're going to inform you now and really dissect this thing for you, understanding that this is our business and this is the hardest thing. This is the part that most people find it difficult to get because every business has a business model, but they never looked at the financial markets like that before because they viewed it to be a reflection of the real economy. They viewed it to be a reflection of fundamental analysis, how a company is doing, how the macroeconomic factors are influencing the economy. But we're saying, no. That is secondary. You need to understand what the business model is. So in this last part, as we go into it, we're going to describe to you as much as possible because maybe there are different people out there with different levels of expertise. You don't know where you're at in terms of your trading journey. But one thing you need to know that there's actually a system and a method in the way these things are done. And the reason why people fail is not understanding that similar to any other business, the financial markets has a business model. So to be successful, you have to understand the business model of the market makers. Okay? So talk to them there, Joe. The first thing they need to understand is, so what we try to do here as well is really break it down step by step. Step by step. Now, they may not be able to,
Step-by-step approach. Or the common knowledge, guys. The common knowledge perpetuated by the general education in relation to trading and investing to buy or sell, right? To buy low or sell high. When the market participants buy low or sell high, they realize short-term profits and believe that price will continue to go in that direction of either the long or short position taken as represented by the dotted line. So what we're seeing here within that little movement is where persons will look to buy and sell, and they look for it to continue going in that direction. This phase is called consolidation. Great. Note that the range does not necessarily need to be sideways, right? Sideways direction. And most people think that a consolidation only moves kind of sideways. It can also be in an ascending order or a descending order. Right? It could be going upwards, or it could be coming downwards, or it could be going sideways, right? There are three different ways that this phase can happen. Now, this is the setting up of how the dealers actually start the day, because their job is to accumulate a certain amount of money before they make their moves, their real intended moves. They need to accumulate a certain type of money. Now, remember, the market is in business to what? To make money. All right. And I need you guys to understand that the market is not designed just for us to succeed. Great.
all right. So
the market is not designed just for us to succeed. Great. They're here to make money. We are here to make money too, but they're here to make money. But the only thing between us and them is that they control the market. They influence how price moves up and down, right? So they can always have an up on us because they can catch us or fake us to trade against them, to go in the wrong direction, and then they can take the opposite side of our orders. Great. So that's something that we need to pay particular attention to. It's very important to understand that the dealers have a job to entice you to trade in the wrong direction. This is where you see temporary profits or small profits, and then this is where the damages come. All right, guys?
All right. And so what you want to get from this is to know that retail traders are taught the wrong in education, which is to buy low and sell high. That is the wrong education. People say it all the time, oh, buy low, sell high. No, that is wrong. It's a setup. It's a setup, guys. It's a setup. So this is how it starts off. So that's why market makers, they see the whale as the icon there, because when people reference the big boys, they say, well, the whales. And then the stupid retail traders are duck. Quack, 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 quack. He don't know nothing. He just quacking all the way down the road. Okay?
But Jay, you know, right, with this same scenario here, you will see that the market makers creating a trade environment like this. While they're bouncing between there, persons are coming in and making making small profits. But all they're doing here is enticing people. Now, they want you to commit to the business. So their job is not to damage you all the time, but to show you a little profits. Because they know you're going to blow your account and come back. They know you will blow your account and come back. Right? So when they're creating this, they have retail traders making money based on what they were taught. They are making money, but as I said, when you look back 6 months down the road, how much money you lost? How much accounts you blow? So if that really was working, how come you blow all them account and lost all that money, and they were still making money? They were still seeing a profitable day. You were still seeing a profitable week. This is how deep the manipulation runs. And it runs real deep.
Correct. It runs deep, and people keep coming back for more because they're brainwashed. Okay, so that's the first step. Now, the second thing you need to understand is when we talk about where the money is. We keep on saying that where the money is. Okay, because when you buy or sell, you are creating liquidity in the sense of your stop loss, where you enter in the order at. that creates its liquidity. So below and above, we refer to it as a pool of money. Okay, the dollar signs represent the liquidity. And to better understand that, think about it in terms of what we told you earlier on in terms of the role and function of the market maker. What did we say the market maker is also referred to? Somebody tell me in the chat. We refer to them also as a liquidity provider. So when they generate that liquidity, when people are buying and selling, that type of market structure, which Joe said earlier, you know, you're always jumping the gun, is called a trading environment.
Trading environment. That's it.
Correct. That is a trading environment. People are within a certain price level, they're buying, they're selling, they're creating that liquidity because at the end of the day, this is where they're entering and exiting positions. And the market maker is facilitating the entering and exiting of those positions because he is the liquidity provider. Okay? And that is how they essentially, I mean, let's talk about how they get compensated for that, Joe.
Flip it.
No, I said I want to talk about how they get compensated for that because remember you mentioned this earlier. So you want to just touch on that again?
Yeah, we don't want to hit them up. We don't want to hit them up all that juice one time. You want to hit them up all that juice one time. I don't hit them that juice already. You want to hit them up all that juice one time.
All right.
Hey.
So to put that right, so yeah, so you have no value. That's why they must print something on the charts to get you into position. So you spoke about that. So that's this trading environment. And the second thing now is what they're trying to do here, Joe, when they give you that induced move. Talk about that for a second.
The induced move. As you see, when they say sell high and buy low, the real deal is really supposed to sell higher and buy lower. Right? Because they know you're going to be looking out for lower lows and you're going to be looking out for higher highs to be formed. They will reach out for the liquidity. They can do it in one strike. They can do it in certain pushes. They will come up and they will snatch the liquidity, which is stop losses. Stop losses is a form of money on the charts. They can see where it is. They have a board where they can see where it is. So when you take a sell at the high and put your stop loss above that zone, that structure there, that's where the money is. So if the market is in business to make money and they created that trading environment there where they keep on pulling price away at a certain price level, which forms a structure for the retail herd to see, what you think the next time price approach that same level and show any type of rejection, what do you think retail traders are going to do? They're going to engage. When they engage, remember, as I said earlier on, the market, we are no value to the market makers unless they cannot get us in a trade. So they create a trading environment, something that you can see and identify on the charts. Not you alone, but you and all the other people who, you know, applying retail trader education. So what you think all of them is doing, because they are seeing the same thing? What do you think they're doing? All of them are taking the trade in the same place. And what you think all of them are doing also? They are putting their stop loss in the same place. That's how they were taught to trade. So now the market makers can see a clustering of stop losses above that zone, and the market is in business to make money. What do you think they're going to do? All right. Let me see in the chat. What do you think they're going to do? What do you think they're going to do? You think they're going to just drop price off where retail traders enter? They cannot give away the big banks money. They'll get fired. They can't just drop price there and make you make all that money and leave everybody stop loss above there. They're going to reach up there, snatch that liquidity, clear the board, and then, you see, when they make that drop, it's seamless to them. They make a seamless transaction for their clients. They get all the retail traders off the board and then they make the transaction. But for us who know better, that's where we will be trading. because we know how to identify where the money is. And it's all about the money in here. Once you can find where the money is, that's where your trade opportunity is going to be.
Okay.
It's as simple as that.
Good. Nice. So, and while they're doing that, what you also need to keep in mind, another key thing take away from it is that there are three objectives of the market maker. Right? The first one is that induce move. So while you're buying and selling, push price up, they sell higher, and then induce you in the wrong direction. And this will bring back what we spoke about earlier in terms of the key concept number 2, that aggressive price movements are used to induce traders in the wrong direction, that in the opposite direction of the real and intended move. So after they do that, then they come with objective number 2, which is a trap. How to trap people now, Joe, as you already know, is that people are taught there are 2 types of traders. There are breakout traders and there are break and retest traders. So the first induced move induces those traders who trade in market structure, and they trade, oh, this is a breakout, price breaking out, oh God, they're going down. Then all of a sudden it pulls back on them. So that's why we say, and that is objective number 2, because now they're trapped. They are trapped because now they're in drawdown, some level of drawdown. Okay? So they're trapped now. At the same time, when they trap those traders, investors, they are now able to buy at a discounted price because they drove the asset price down to low. While you thought to buy low, they now start buying lower. Okay, do you understand that? They are now buying low, they're getting discounted prices, the stock market.
Correct. So they're getting a discounted price and then they move the price up. They drive the price up from that point there. And that's where our trade opportunity comes from. They will entice you to take a trade in the wrong direction and then reverse price against you. That's why some people will take a trade and they will see price immediately reverse against them and they swear somebody was watching them. If you ever felt like that, don't worry. You ain't the first and you ain't gonna be the last, right? Right? You ain't the first and you ain't gonna be the last. You take a trade and you swear somebody was looking at you right around the corner. Like immediately as you click buy, boom, price reverse and never come back in your direction. Now you cool sweating, you want to pelt with your phone, you want to cuss, your heart racing off, right? It's crazy. Good. But breakout and break and retest traders, this move is done to really, now I need you guys to understand this. The market makers, they validate all retail trader strategies. All, not some. Every single one of their strategies, the market makers validate them. What do I mean by that? They paint a picture or create a trading environment for these traders to trade based on what they know. That's what I mean by they validate all retail trader strategy. I'm talking about all who using the moving average, all who using the Fibonacci, all who using all the indicators, all who using the support, the resistance, the trend lines, right? These things, in my point of view, is what damaging a lot of retail traders right now. Great. These same things that persons are being taught to apply is what having a lot of traders in the game unsuccessful. All right. And why I say that is because when I understand how the business of the market really works, right? I understand the market makers and how the business of the market really works. I could have seen why every single move used to happen and people used to lose their money, right? Like literally blow accounts over and over and over. There are a lot of things used to happen that I could have never understand back in the days of the technicals and the support and resistance and price just breaking through support and price just breaking through resistance. But when I saw the market maker template and how the industry was designed and the business model of the market makers and how they actually conduct their business. I was blown away. I was literally blown away because I could have seen every single thing. So don't feel or don't let nobody come at you and tell you you're feeling because, listen, 95% of traders not failing just because they don't have the right mindset or the right psychology or the right whatever. Most of them are failing simply because of the wrong information, the wrong education, and the wrong knowledge. Why? If you learn the right thing, it trains all of that for you. When you are exposed to the right information and the right education, the right knowledge, it is very straightforward, specific, and direct. So even if you're indisciplined, it teaches you discipline. If you're impatient, it teaches you patience because it's telling you you have to look for something specific and only react to the trade when you see it. So even if you don't have the right mindset or the right, you're gonna follow the information that you're receiving and you're gonna apply it just the way that it teach you to. But when you have the retail information, education, and knowledge now, you can trade every day, whole night, revenge trade, this, that, make certain amount of money, trade every day, grow your trading account every day by how much, and this is what you have in your head, right? So what are you doing? You know what I mean? But this year, guys, this year is what will make you be an unlimited figure earner once you respect the process and apply yourself properly and consistently. With this, there is nothing for you to learn in trading again. Just to apply and focus on this.
Yeah, we have to show them one more objective. So that they induce traps and all they trap. So when they trap there, when they trap there and price pulls back, and then it repeats the level, what that does is that further induces people to go short. Okay, so now they have successfully accomplished objective 1 and 2. Right, Joe?
Correct.
And the key concept to realize here is that when retail traders are taught to buy low and sell high, market makers take advantage of their education, what Joe said, and they sell higher and buy lower. And that brings us to objective number 3. Because now they have induced and trapped traders in the wrong direction. They bought at discounted prices. This example gives an example of a bullish movement. Okay, and now they're ready to book their profits by shifting price in the opposite direction, which is the real and intended move. Ladies and gentlemen, they captured the liquidity because people were taught to buy high and sell low, or buy low and sell high. They captured the liquidity that was generated from what? From the trading environment that we saw, this trading environment right here. Okay?
Yeah, they do the entire move, do the trap move, and once the dealers make the trap to the low, there's only one way the market is gonna go. It's gonna go up. Why?
Up and away.
They cannot entice people to sell and then sell the market. Right? They cannot entice people to sell and then drop the market. Because they're not gonna make money by doing that. They're gonna lose money by doing that. Right? So once we see that they make the induced move and they trap the traders going in the wrong direction, there's only one way the market will go. This is where our safety trades come in from, which means we're sure we're going to make some money on this move. Because the only way for them to get the money is they have to go back up for the stops. The dealer's job is to entice traders to go in the wrong direction and then reverse price against them and hit their stop losses. Right? This is one of the main ways that they actually make a lot of money. And this is what they try to do. So all the wave movements that you're seeing in the market, all the wave movements, the up, down, right? All these things are driven by induced trap and shift. And it's a game of having traders going in the wrong direction and reversing price against them and hitting their stop losses. And that's how they literally make their money. That red drop down you all seen coming out of that or after that liquidity move there, that red mark you're all seeing down there, that happens, persons start market executing on that move going down, right? To sell. People who are already buying in the Asian are getting their stop loss hit on that move. This is for breakout traders. That's when it come out of the contraction, breakout traders are going to take positions there because they believe that price is going to continue dropping. When they pull back like that, what they're doing now is validating break and retest traders or continuation traders who will now take a buy right in the middle of that W structure right there. I mean, they'll take a sell right in the middle of that W structure right there. And they're going to go into a little profit. They're going to see a little profit for a few seconds or probably for a few minutes, right? They're making this second induced move back down to that low to entice more people to start going well. Persons who's trading structure, that pull back up after that drop down there, right? That sharp pull away, that will line up to the bottom of the structure, the bottom of the range there, which will be like support become resistance, resistance become support. Right? That's one. Somebody might use Fibonacci and pull it from the high to the low, and then that's going to line up with the 50% of the 618 Fibonacci level, which will also line up with structure to the left that leave clues. So retail traders are seeing so much confluence and confirmations that price is going to drop. Yeah, they don't have a clue what's coming up. Right?
Crazy. And the reason they don't have a clue is because they don't understand the way how the market really works, and they don't want to understand. Okay?
So they would, you see, so this is why they will never become successful. They will never become successful traders because you can tell me if you learn that way and you're applying that all the time. Now, there are certain times that you're going to make money off of it. Why? There's something called the market maker trend, and there's something called the retail trader trend. And they line up. They line up sometimes when they're making the induced move on the bigger cycles. So you may find price break out of the contraction sometimes and go in that particular direction on a nice long sustained run. But you know what you're gonna do? You're gonna try to do that all the time. And the fastest way to keep doing crap is to do it once or twice and get you, like actually make money off of it and see where that will put you. Right? So you take a bad trade and you get you on that day, you know you will see something like that again and it will take you trade again. But this time it's gonna beat the purple to you, right? Okay. So you got to know what you're applying, guys. You got to know what trading is not difficult. Trading is not hard, you know. I'm not gonna say trading is easy. What I'm gonna say, trading is simple. All right, and simple come with a level of understanding and application, knowledge, wisdom, right? Understanding is not difficult. This is not a get rich quick, but you can make really good money, right, over a period of time. We need to understand how to approach the market professionally, understand who we're up against, understand the objectives, understand that the market is rigged, and for us to become successful, we need to understand what's happening behind the scenes. There's a bigger driving factor behind all the education that's out there. That's why you read all those books. You read the Candlestick Bible, you read Trading in the Zone, you read all these things, you watch all those nice videos, you watch all this good stuff, and still you couldn't find the Holy Grail or nothing close to it, right? Yeah. Because it's designed to beat you up. You got to know what you're doing. You got to use wisdom in this market. All right, so, let's move on.
No, that's great. That's great. So to sum up at this point, Joe, you know, we just showed them who the market makers are. We showed them how to identify liquidity. We showed them the business model about a trading environment. Retail traders taught to buy low, sell high, how that creates liquidity. Spoke to them about 3 objectives of the market maker to induce, trap, shift. And we showed them of how they do it and how that the general education that exists, how that is actually used against the traders. And the key takeaway from all of this, what you need to understand is this concept right here. where the money is where the trade opportunity will present itself. The better your ability to identify where the money is, that pool of money that we referred to earlier, that liquidity, because that's where the liquidity providers operate in. Once you are able to identify where that is where, your trading opportunity would present itself. So let's show you some examples of what that look like. And I'm doing it, we're gonna do it across asset classes. Let's start with Bitcoin. There's Bitcoin on a daily chart here. And you can literally see, ladies and gentlemen, that the area of the trading environment, you see prices going up and going down, going up, going down, and then boom, you see the fast move. People say Bitcoin gonna drop and pop. People say, they say,
let's go into hell.
Yeah, they say, I know this Bitcoin thing was a fluke. Look at it. And they're selling. And while the market makers, what is doing there? What is that? That is key concept number 2. That is a false, manipulated move geared towards getting discounted prices. Where was the money? The dollar signs, where people were buying at that time. And then right after that, Bitcoin just soared. And right now it's trading at what? Over 60,000, I think, as of.
Correct. Beautiful. I know my wallets are looking nice.
Yeah, you're real good. Right now, yeah, you're real good. But this is the takeaway here for this. The market is designed to stimulate fear, panic, greed, and exhaustion. The market makers now use a series of tactics to challenge those emotions. So right there, people get fearful. They start selling off the coin. It's time to sell and take the profit. It's designed to wear out your patience. That's why after the market dropped, you just saw it just stayed there for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days just in one direction, weighing on your patience and your resilience. Should I stay here in this position, wearing you out psychologically? That's why this is psychological warfare. And hence the reason why your trading success will be after you get the correct information, after you understand the system, after you understand the business model. The rest is all psychological.
And you guys need to understand what we're showing you here plays out, I will say, 100% of the times. They mightn't do it as clear as we might have some projections, but it's happening. Whether you believe what we show you guys here today or not, it is happening, and your trading will be affected by it. I guarantee you that. Right? So whether you believe what we show you here today or not, I guarantee that your trading will be affected by this, because retail traders have this concept of everybody trading markets differently, and everybody sees the market differently, and everybody trades the market differently. And that's the problem right there. Right? Because we who understand the business of the market, we all see the market one way. Right? We don't see the market 1,000,001 different ways. We see the market one way. We might react to different things, but we all understand the business of the market. We don't understand different strategies, harmonics, this, that, the other, trading and trading 1,000,001 different ways, and seeing the market 1,000,001 different ways. We see the market one way, and we trade the market a specific way. Right?
And
this is what puts us above all. Yeah, go ahead.
No, and to add to that, for community, that's why it's really powerful. So when we do our daily recaps, which we do, people, how powerful it is that everybody is supposed to see the same thing if they get it right. That's what, it's not like one person say, well, I thought that was a bat harmonic. Oh, that was a crab. I thought this was this, that. No, you literally come back as a community now. That's why the community is so powerful. And anybody that's on live right now, you guys should definitely look to get connected. Reach out to Joe, reach out to myself. Okay, that we all are supposed to see the same thing, which is really powerful from a community aspect. Okay, So this is another example there of Tesla. Everybody, Tesla is the darling of the stock market right now. So before I showed you cryptocurrency, now I'm showing you a stock market. This is on a monthly time frame. Again, this happens across all time frames, monthly, 4-hour, daily. Here we see
all asset class.
all asset classes, all. So again, you see the sideways motion. What is that called? Somebody tell me in chat. I see trading environment. What does the trading environment generate? It generates liquidity, also known as a pool of money. Then right shortly thereafter, you saw the price of Tesla drop. So people say, yeah, I thought this electronic car is shit. That's why, right? People say, well, this, I must have what this thing going to drop. They have to start selling off. And then what happened? Market maker, or if you now trading in line with the market makers, you smiling, you saying, boy, I get into buy an asset for a discount. The stock market is on sale. You're not looking at the market like when it's what is that big thing that's out Thanksgiving? What is Monday, Cyber Monday, and Black Friday. This is how you start to look at the market. The market on sale. And then right shortly after that, you see the price of Tesla just
up in the air.
And then people ball in. So that is why it's very important for each one of you guys to learn to identify the clues. Remember, you're not trading against lines and patterns. You're trading against people. But most importantly, you're not trying to trade against them. You're trying to trade with them.
With them, which is very, 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 very powerful. That's the only way for a trader to become successful. You have to trade in line with the market makers. There's no way us as retail traders can go up against these guys. There's no way. These guys are the rulers of the market. It's a financial war taking place. I'm showing you guys here how to become successful traders. How to become successful traders. That's what you're here to do, right? You're here to learn how to trade, even though, and I want you guys to start looking at yourself as an investor. Don't just look at yourself as a trader, but look at yourself as an investor. As an investor, we don't play to lose. We do not play to lose. We understand that we cannot win 100% of our trades. We cannot win 100% of our trades, but we use calculated risk. We make informed and educated decisions, and we use calculated risk. We're not in the guessing business. We're not in the gambling business. We're in the 90 to 95% accuracy business, right? That's the business that we're into. 90 to 95% accuracy.
For sure, correct.
Right? And that is where you need to be. All right.
Yes, sir. So what we show them there, Bitcoin, we show them a crypto, we show them a stock. But they say, but what about the lower time frame? You're sure this is monthly and daily. I don't trade off the monthly and daily. Because we see this on a 50-minute chart. Okay, let's take your USD, the most commonly traded currency in the world. This is the most common traded currency. Look at the same thing. You see the trading environment. This is not sideways, it's in the form of an upward channel. What does that do? Generate liquidity on both sides. And you see the sharp, you see the first induced move, and it pulls back. Gives you the W, it repeats the level with another sell. And then markets shift. Same
Trade
thing
above.
from a daily time frame to a monthly time frame to a 15-minute time frame.
All right, so these are the basic concepts of what you should look for on a chart. Any given time frame, any given pair, you look for and you could trade, you will be able to get an edge to trade in line with the dealers, which will bring you a great level of success, right? To be consistently profitable because you're trading in line with the dealers. Perfect entry is not the key. Perfect direction is the key.
Correct.
Right? But you're going to have certain things you're going to look for, which will tell you when to enter. It comes from candlesticks, right? And they create certain patterns. So you're gonna learn certain things, guys. But as I say, there is no book out there can coach and mentor you. No video out there. Some people look at some of my videos. Some people look at some of my, some of my stuff out there, and they think that, okay, I got this. I got this, right? You're gonna need much more than that, right? So even when the book is completed, I'm going to be directing people straight back to the Fish and Pips community because I know all the information that you go through, you will not be able to go and get on your own. Anton Krill said it best. Find the people who are successful, people who have the results, right? And let them teach you. Let them go and copy them, emulate them. Right, that's what they need to do. So I know persons are going to get this information and don't know how to put it into perspective, don't know how to properly well apply it. This is where you get channeled straight back to Fish and Pips community, where you will be coached and mentored on how to apply each segment properly so you can understand what you're doing properly.
But here it is, Joe. That there's some of them, yes, are gonna do that. But there's some of them who are gonna hear this information because, like I said, we gave this out, tell people, and they rejected it. Because at the end of the day, though this business model exists, due to human nature, Joe, they're not going to trade a system, They are going to trade whatever they believe to be true.
Yeah. Well, that's why we're not looking for everybody. We're not looking for everybody. We're only looking for the ones who really understand that what they're doing, and they really care about the results. You know what I mean? Because if you don't reset and don't relearn, well, then you don't really care about your results. We're not gonna. I rather run with 3 than to run with 300.
Right. So, and yeah, no, I'm with you 100%, man. So, but it's just understanding that, because that's the first thing that you said earlier on in the conversation, that markets are belief driven. So in terms of the final thoughts as we wrap up, this is the question to the audience right now. They have how many people? They have 46 people on. Do you believe that the markets are driven? Usually once you're an individual who just live in a society, you tend to do and behave in a manner that's consistent with whatever you believe to be true.
Human behavior, I call it.
Correct, human behavior. And in the school of trading and investing, people adhere to any one of these 3 types of analysis: fundamental, technical, sentimental. That's just what is out there. And this is what drives the belief and drives people to adopt one of these types of analysis. And that's what they use to make the investment decision. So at the end of the day, no matter what the investment approach is ultimately going to make you form a belief. The fact is that the markets are belief driven, and therefore, if there's an entity, organization, an institution out there, some like the market makers, who understand what you think, what you believe, and how you make your investment decisions, then I think, Joe, it's pretty straightforward that they can literally use that information against you.
Correct.
So, be different, be a contrarian, and at the end of the day, let the markets prove you right or prove you wrong. To be successful, I'll leave you this statement here, is that you literally have to do the opposite of what 95% of people, the general public, is doing.
And that's it. Bam!
Right?
Powerful.
May the markets go with you
and not against you. May you go with the markets and not against it. Right?
So to give them this preview. Do you think we should give them this preview? Give them the PDF? What do you think?
Yeah, man. I think they should definitely get a taste of it, because
You guys
what we
want
will
the
do,
PDF? You
we
want
will
the
be
PDF?
on. Yeah, we're gonna be unlocking some people brain. We're gonna be unlocking some people brain, and
Who wants the PDF? Who wants the PDF? Type a 7 in the chat. Say, I want the PDF.
right, we're gonna be unlocking their brain, right, and persons are gonna reach out, and because they will want to come in the community to really apply this, because don't think this is it. Don't think this is it.
That's a
There's a lot.
preview.
Right, this is just a preview.
That's a
Right,
preview.
there's a lot of stuff that you guys gotta get. Right, that's why the Fishing for Pips community is where you have to be coach and mentor on this. All right, but when the book comes out, it will be available online and ebook. Right, also looking to go into hard copies also. All right, so when the book is completed and it's out, it will have the full information in it. All right, every single thing, all our knowledge, all our expertise. I pour my entire life
For real,
into
right?
that. All right, since I've started trading, all my experience, all my knowledge, all my wisdom, all my understanding, everything, how to master yourself before you master charts, you're gonna get some information in there that will definitely, I mean, if you fail, I mean, literally because you just didn't put in the work, man. You exposed to this information and you really sacrifice the time, the effort, the energy, right? The commitment, you do what you have to do. It's going to be very hard for you to literally fail. It's going to be hard for you to fail, right? As I say, the only thing you can guarantee is failure. Right? You can guarantee failure if you don't do nothing at all. But if you put in the work, something just might happen. You never know. But there's one way to know that nothing will happen at all is when you just sit and do nothing. Right? So you got to be able to put in the work, guys. It doesn't take much. I've done it. I've taught a lot of people who have done it. People came in broken, lost so much money, they're damaged, they're hurting, they're depressed, they're frustrated. They try all the strategies out there, all the signals, all the copy and paste. They try the AI systems, the EA systems. They never understand that you is the one who have to do it. You are the signal. You have to be the signal. You have to learn the skill and you have to apply it. People who really become successful in this didn't get spoon feed in. We need to understand that. There's no successful trader, no one who make millions of dollars on a yearly basis who took signals or copy and paste or anything like that. You have to put in the work and learn the skill set to reap the real benefit. Right? You have to be the signal. You got to put in the work. You got to apply yourself. That's why I create independent traders. That's why I don't send anybody any signals. I don't give you a fish. I teach you how to fish because I need to empower you. I don't want you to become successful. I need you to become successful because I know your life depends on it. Your family is depending on you. Break some generational curse. Become the first rich person in your family. So guys, I hope you guys literally I hope you guys enjoy what we bring to the table for you guys this evening. From myself, Fishing for Pips community, Andre, my brother from another mother, and everybody who is a part of us, supporting us. Right? We don't have to do this. We could just make money and really don't care. But I've seen what it done to persons. Trading is a serious business. I've seen people coming in here looking for a way out, thinking that trading is the way, and come in here and get damaged by what's out there in the public domain. So we decided to change the game a little bit. As I say, I couldn't sit idly by and watch people just fail, knowing that I know something really powerful and don't share it with other people. I would have feel like I just defeated my purpose in this business. So I started to share what I know, And I've seen it literally change people who were failing and blowing their accounts and losing all their money to becoming consistently profitable. So what I teach is solid and it makes a difference, right? My students can attest it. Not everybody is gonna agree with what we may be sharing here. Not everybody is gonna, come on board with us or learn this. And that's not my goal. I'm only looking for the ones on them who need the help. If you're good, you're good. If you're failing, I think this information is for you. All right. This will make you become successful. Okay, Andre, you want to share anything before we wrap up?
No, that's to let them know how to get in contact because they're asking about the how to get the book.
All right, so to get in contact with us, guys.
How to get the preview? They want a preview. So
all right, y'all can get in contact with us. And well, Andre, you could drop in your contact. But other than that, we could get contact with me at Fishing for Pips on Instagram, right, or on Facebook right here. Y'all could contact me on Messenger. All right, y'all can contact me on my phone number, my email address, right? And we will have that information sent to you guys. Okay? And definitely we can see you guys are being impacted and learning something that can really take you to where you need to be. All right. So contact us at Fishing for Pips. You all can contact me on Instagram or Facebook right here. Contact me on Messenger, WhatsApp. Anyway, all right. We're gonna drop these dimes and get you guys this information so you guys can read through. All right. And I say this all the time. You have success awaits you, right? Success awaits you. You just have to know who you're following, know who you're learning from, know what you're applying, so you will reap the benefit of the work that you're going to be putting out. All right. There's a lot of false information, false education, misconceptions, and even false educators out in the public domain. You've got to be careful. All right. You've got to be careful of what you learn and what you apply, especially in this trading business. Other than that, you're not gonna see the results. Okay. So guys, with that said, that we are out. Hope you guys get some value, gain some knowledge from this, and learn something. Until next time, we're gonna pick up, get in contact with us. If you want to come on board with us and learn this method and master it, definitely you know where to find us. Respect, and we are out. Andre. Bless my brother.